Hello, everybody. Welcome into Commodity Culture. My name is Jesse Day, and on today's episode of the show, I am joined by Henrik Zeberg, founder of the Zeberg Report and head macroeconomist at Swiss Block, an expert in business cycles and technical analysis. We're going to discuss why he thinks we are in the final phase of a blow-off top in the broad market that will lead to an epic bubble bursting, how he expects commodities to perform in the aftermath of this crash, his current forecast on gold and silver markets, why falling energy prices could be heralding a recession up ahead, and so much more. I hope you'll enjoy my conversation with Henrik Zeberg. I want to start off with a tweet you made recently where you said, "We are in the final phase of the blow-off top. This phase is going to be the most explosive. Reality is that it is a bubble and it will crash. But yes, for now, I ride the bubble." How will you know when it's time to get off the ride? And how steep of a crash are you expecting up ahead?
Okay, so first of all, that will really, the last part we'll have to consider different assets. So there will be different crashes and different assets. But so when do I know how to get off? Well, first of all, this is where I work with structures. I work with Fibonacci extension levels. I work with RSI divergences, momentum, and so on to understand where is it that I most likely could see a top. And if you look at the S&P, I had back in 2022, I had the expectation of seeing the market moving to 5,700 to 6,000, that range. And then as we get closer, I've been able to modify that more and detail it more, which means now I have a target of around 6,300, maybe all the way to 6,400. But that has been my target for a long time, and the reason I have that is because, as I said, of these structures that I follow, I follow, and they suggest and tell me that we are getting closer to that. So when I'm saying we're getting close into it, I mean if we look at the S&P, then it's not a big move we have if I'm going to get the 63 to 6,400, but there's still some upside. The Nasdaq will probably be a little more, 23,400, something like that, maybe up to 24,000. But that probably be the end of it when it comes to equities. But when we look at uh, Bitcoin and we look at altcoins and so on, then I think we are in that phase where we start to see the rotation from some of the large caps into crypto, into Bitcoin also. And we have seen this after the election where we saw the start of this blow off move that I've been expecting all along. And I said 115,000 to 120,000 on Bitcoin. I still stand by that. So we are getting closer. I do think there will be a lot of volatility here now, but we will also see that some of the altcoins, and we will see definitely, the meme coins have already been doing quite of a spike. I think they have somewhat more in them, and some of these will be harder to assess exactly where their top will be. But that's where I maintain the view that we will have a blow off top that will go hand in hand with Bitcoin and S&P. And when they start to look like they've reached the tops that I'm looking for, well, then I probably also will be getting out of the meme coins and the altcoins and everything else I hold in the crypto space.
Very interesting. I wonder, you say you see
And maybe I
multiple
should answer the
bubbles.
second part of the
Yeah,
question also.
right.
So
Yes.
yeah, sorry. So there was a long question and a long answer from my side. No, so if you look at the S&P, and you look at the Nasdaq, and you look over the last couple of years, it really has have been blow off tops that we have seen in these. So they moved up quite strongly, especially if you compare to the period before 2020 and also period before that, even longer way back in time. So obviously the last few years have been we've been so privileged in just seeing markets go up, up and up. And that's why it's probably somewhat hard for some people that are just new to markets to see that this is actually quite extraordinary. If you look at monthly candles for the S&P and for Nasdaq, you can see how high they've been moving, or how much and how fast they've been moving. So when I say that the first stop on the way for the S&P will be where we were in October 22, people think, oh my God, that's like 50, 55% down. Correct. But that actually tells us more about the move up we have had than the sustainability of what we have. So I think that the first stop on the way for the S&P will be around the bottom we had in October 22. And when you look at the Nasdaq, something similar to that, and if you look at Bitcoin, well, then I think you're going to see at the levels we just passed through here now with the 60,000. is going to be revisited very, very quickly after having seen the 120,000 around that level. So you will see these 50% declines in the first phase of it, and that's going to be developed into 25. We're going to see those levels coming quite fast in 25, and then later on, I would expect some more to come as well.
Hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. Are there any asset classes that are safe in this scenario? Is there anything you could see potentially going up in a broad market crash, or at least maintaining its value or not going down as much as you expect the broad market to?
Well, so there are, when you have different declines. You have deflationary declines. You have declines that are more caused by inflation moving up. And this one here will be where we see where we start to see inflation coming out of the system. I mean, I'm still in wondering why with the Fed and people talking about inflation is a problem here. I think inflation is about to fall over a cliff together with oil. So I think, if you look at all the, if you look at commodities, if you look at equities, you look at crypto, no way. There's nothing there that'll be in a good asset to hold into that phase, into the deflationary phase. But there will be, of course, to hold the US dollar. That's always a good thing to hold in a deflationary phase. And I think the Dixie may go to 120 from whatever level where we see a bottom here within the coming weeks and months here. Then I think the dollar can move up very, very strongly. And if you look at and then if you look at TLTs, obviously TLT or bonds, also German bonds would be good to hold. US bonds, well, I think that is a good hedge for what is to come in the deflationary phase.
Very interesting thoughts there. I want to get your view on how gold is going to play a role up ahead through all this, and perhaps on the other side as well, because I know in the past when we've spoken, and I've seen you on some other interviews as well, you've called for a lower gold price, that gold is not the best asset to be holding at this moment in time. We have seen it go to all-time highs now, correcting somewhat. I know that you expect gold to fall as well, and then on the other side of the crash to come back up and be a great asset to hold in the aftermath. Is that an accurate characterization? Would you not be holding gold at this point in time and be sitting on the sidelines when it comes to that trade?
I think it's interesting to see how people have been talking gold up, and the gold has been moving up quite strongly, but it's still up, let's say, 1.6 times from the bottom we saw back in, was it 2014 or something around there, 15 maybe it was, yeah. And that's 160%. Great, amazing, fantastic. But if you look at it in the big perspective of things, and you look at also across with other assets, all other precious metals, you'll see that gold actually has outperformed silver. So if you look at from silver from 2011, it's down like 40%, I think. If you look at platinum, somewhat the same, 43%. If you look at the gold miners, I think it's 48 for platinum. If you look at the miners, they're down 43%. So why is it gold is up and everything around gold is down? Why is it that we see that discrepancy? Why do we see that disconnect? And then people will start to say, because that's the feeling within themselves, the sentiment, say, oh, it's because gold leads. I think that's wrong. I think it's because gold has been talked up to becoming that, that's the safe haven, and actually more or less now is in a kind of a smaller bubble by itself now, because it's been spoken up so much. Everybody needs to hold gold because that's a safe thing when the debt explodes and when we have all these bad things going around. The problem is that we just haven't seen that supported by everything else. And I've been of the idea all the time that what you see here in terms of the all-time highs on gold is actually what I see still as a correction. I know that sounds wrong, difficult to understand, at least when you see gold going to new highs. But I actually think you're going to see a rather strong decline in gold to the very reasons that I just talked about here. I think you're going to see that first. Reason, when you see a deflationary bust, you have the greatest bubble in the world in all asset classes. If you look across the markets, and if you look at that and you say, okay, when you're going to see a deflationary development, what will then be needed? Dollar will be needed, US dollars, because there will be a lot of debt that will be implode. There will be a lot of restructuring and so on. And that is where the dollar will be needed. The dollar is going to go to 120 on the Dixie, as I just said. I don't want to hold gold into that environment. I actually think it's a very bad environment to hold gold. And especially because gold is 50% above its top from 2011, where the rest of the pack is like 30, 40, 50% below that, even gold miners. So why is it so controversial to say, I think maybe at this point here, gold is not so good an asset to hold? I know I've said it earlier as well. I stick to that. And it has been developing into what I will say abnormally to compare to what you see with the other precious metals. So I think the day of reckoning will come to gold for a short time, for the time where you see the deflationary bust. In 2008, we saw it for 6 months. We saw gold declining by 34%. We saw silver declining by 60%. I'm just saying, into a deflationary environment, I will not be holding gold. And I think that is actually what the rest of the precious metal assets are actually telling us is maybe gold has been front running it a little too much, and maybe that is going to come to a reckoning after we're going to see when the dollar starts to rally into a deflationary bust, if I get that right. So no, I don't think gold is the right thing to hold at this point. Will gold be the right thing to hold when we see this whole thing passing? Absolutely. But that will be from quite different levels as I see it.
And silver, I'd like to get your thoughts there. Obviously, I'm guessing they're similar to gold. Silver way off its all-time highs. Silver stackers, some of the most resilient and frustrated investors at this point in time. How do you see the silver market playing out both right now and post deflationary bust? Um, and silver miners especially look very undervalued at this point in time, along with the metal itself. A lot of people see this as a contrarian value play at this point in time. I'm guessing you have a different view, at least for the moment being.
Absolutely. I would not be holding it now. I think it's again, I think people are starting to feel the sentiment now that silver has been bouncing up somewhat, but is still down a lot since the 2011. I see the structure. If you look also at the structure on a weekly basis, you will actually see that there is what I say, momentum-wise, a negative divergence, and silver has been going into a wedge and now dropped down out of that. And that is not necessarily a good sign on a technical basis to buy silver on. So I think people are getting following into the sentiment of this and saying, oh, now silver is going to follow up to gold. Maybe it's the other way around. And maybe silver is just doing a small bounce in this market here. So again, I would say silver and gold will follow along as they always do. I think gold has been outperforming itself for some time. There will be a reckoning now into a deflationary bust where dollar is going to be everything. And that's where we will see people will once more, unfortunately, get a little frustrated with their positions, gold, silver positions into that phase. After that, it's a completely different environment. And that environment probably is going to be much more of a stagflationary environment. And when we know that, when we have seen, I mean, if you saw 2015 and gold is up like 160% since then, well, I mean, if you looked at the stagflationary period in 1978 to 1980, you would actually see how gold was up 5 times in 2 years' time. Gold has been struggling to go 160% in what is 8 years. So this that people say this is the big thing right now, I think that is a mistake. It's a mistake, and I think we're seeing into we're looking into something which will come down first strongly because of that development in the deflationary bust, and then you'll see it develop, in the way it should when we see a stagflationary environment, which I think will be very, very strong rally. And that will be 100 times in a year or 200 times in a year and a half, things like that, where it goes really fast.
You've also indicated that you're bearish on the energy sector here. You mentioned falling energy prices. You see the next support level for WTI crude at $43. Walk us through your current thoughts on the oil market, and if lower oil prices, is this a classic signal for a coming recession?
Yes, absolutely it is. And we've seen how ever since everybody was talking about this inflation is going to come, and we just continue to see inflation moving up in 2022. We saw actually the opposite. We saw inflation topping out. We saw oil starting to roll over. The inflation spike was actually just a spike and it came down strongly. Now it's been consolidating. There's a very clear on a daily basis right now, shoulder head shoulder pattern after it has come out of the triangle, which means to me that we are just in a phase of a very big decline actually in gold, sorry, in oil. And that is a deflationary environment. Why would we see a deflationary environment? You will see that because the demand for oil is falling, is dropping right now. Why? Because the consumer around the world is feeling the pain of rates being so high, interest rates being so high, which is then causing a kind of a dampener or putting a pressure on the consumption ability to consume, and that is why we see less demand in the world right now. And that's why also the economy will roll into a recession, and you see that more to larger extent in Europe than you see in the US at this point, but it's going to fall into US as well. So it's a classic business cycle. We see how we have had a spike in oil, in oil into the crisis. We saw how we saw inflation moving up. Inflation then kills the business cycle together with rates. It takes a while for people then to stop, spending less and less. Unemployment starts to roll up, move up. You get the recession. You see the decline in gold. You see the decline in oil, and that is what I think we're about to head into.
And how do you know when it's going to be time to buy again, when those opportunities are going to be presenting themselves? And I specifically want to discuss the commodity space here, as obviously most viewers of this show were interested in that sector. For those who don't have the expertise to be able to analyze the technical aspect of things, should people just be in 100% cash right now, sitting on the sidelines? And then on the other side of things, what are the indicators you'd be looking for, in commodities like oil, gold, silver, uranium, et cetera, to know when, okay, now it's time to get back into the market here?
So I would say that first of all, look at the economy at this point. I mean, if you look at, I mean, you have a lot of talk about a soft landing, which there's no evidence for whatsoever. Soft landing would mean that the consumers were now feeling better. They do not. If you look at delinquencies and so on, and credit card delinquencies, you'll just see that that is, skyrocketing. There's no evidence that the consumer is feeling better. So the economy is rolling over. How long will that continue? Well, it will continue into 25, a good, a good, distance into 25. But at some point, the Fed is obviously going to come out, especially if you see the bust that I'm talking about. The Fed is going to come out with their guns blazing, and I think probably that could be the point where you'll see that due to what they set in motion here with their stimulus and whatever, I think they can set in motion a stagflationary kind of environment. So we will see a deflation first, and then a stagflationary environment developing, which means that you will see unemployment staying stubbornly high, and you will see inflation starting to move up again. And I think the point in time will be when, like we in 2020, 2008, we saw the Fed coming out and announcing these big stimulus packages. And that was in September after Lehman Brothers, when we had the Black Swan events and all that. Well, then they come out and then they are afraid that things can just keep collapsing. When they do that, I think that is a good time. That is probably when I'll say, okay, now the environment will shift. But you'll probably be in a moment there where everybody will be talking about saying, okay, gold lost its mojo. It's not never going to come up again, and things like that. And oil is going to stay low, or whatever they will say. Oil is just, an old-fashioned kind of energy source, whatever. All these things is what people need to say. Well, okay, when we start to hear that, that's the kind of chit chat we want in the street, because then probably you get some good deals. But when everybody is talking about, oh, you need to buy gold, probably it's not the best time. So wait for that. Wait for what is going to come, because obviously the Fed will come out, and what they can set in motion the next time, the next time here with what they're going to do, I think it's going to be a very beneficial environment for gold and for commodities. I think the commodities cycle is going to be absolutely fantastic going into late 25 and early 26 and even on beyond that. So it's about waiting it out and not just jumping into it because it sounds like a good idea. Because inflation has been high some months ago, it doesn't mean that inflation is going to be high for the next coming months. And actually, it suggests with the chart that you look at oil that you can see a rather strong decline in oil, which means inflation is going to come down, and that's not good for commodities.
Do you have any thoughts on where to get yield at this point in time? T-bills and chill were a thing for a while, paying 5%. People would just roll those over and keep their cash there. They're paying a little less now, but still not bad. I'm wondering what your thoughts are there on keeping your cash in short-term treasuries. Any thoughts on emerging market debt, corporate debt, high dividend paying stocks, or any other areas you think look attractive in terms of fixed income?
I would be careful with that also again into deflation. There are times when, especially when times have been exceptional in terms of the kind of return you can see, and there have been great times for Bitcoin, for other things there. And I still think there will be some time. Let me just, point that out and say I don't think we are seeing the market starting to decline just right here. And I think we're going to see equities, risk asset moving higher from here in the US, that is. But so sometimes it's good, 0% is good when the market drops by 25%. And this is where people say, I need yield all the time. Well, yes, but sometimes it's the preservation of capital, which should be in focus when everything else drops. And that is where the dollar, holding the dollar, and there will be some, pairs against other currencies around the world that can be, beneficial. And obviously, as I said, also yields in bonds. I would just prefer to take US government bonds and maybe German bonds for economies that I know will be, functioning and also will go through this crisis. I would find it difficult to say certain corporate bonds will be interesting. I don't think they will into a crisis.
And that's interesting. You mentioned the German economy and German bonds. That's a perfect segue into what we recently saw as a reported collapse of the German government. We keep hearing news about issues, and it's mostly doom and gloom. At least the headlines I've been reading Volkswagen closing down factories, other German companies deciding to relocate, largely due to soaring energy costs. How do you currently view the state of the German economy? Why do you feel comfortable buying German bonds? You said you think they'll get through the crisis intact. Give us your thoughts there.
Because what you need to buy into a crisis, into deflationary crisis, is that you need to buy the bonds. Because what happens to everything is the inflation comes down, then the rates will come down, yields will come down, and that's where bonds go up. So that's what you buy, and you buy it into an economy where the finances are in order, so to speak. I mean, the Germans are not is will be an economy which will thrive. I'm sure of the next many years, but it's a safe haven, so to speak, in terms of it's not going to default on its debt. So that means that you will see that you'll get yields in Germany. But I just want to say again, and this is where it's so important that there's going to be a deflationary part of this crisis here, and there's going to be something what happens after the Fed reacts in 25. After 25, after that reaction, all bets are off in terms of what I'm saying with bonds and so on. This is into that first part of it. So the bigger the crisis in Europe, the bigger the decline in yields, the bigger the move in bonds, and that's why as I see, it's a good thing to hold at this point before the things happening in the will happen with the Fed in the US in 25.
And let's hone in on Europe for a moment here. Are you paying much attention to what the ECB is doing and to the overall state and health of the European economy? Obviously, we're both sitting in Europe as we talk right now. I've spoken to some guests who, on the more extreme side, think that the EU's going to be finished within 10 years. It's going to fall apart simply because of untenable debt and just the way that they run things. I'm wondering how you see the fate of the EU and your current thoughts on the European economy overall.
First of all, if that's the case, that's why I want to hold German bonds, because if I do that, then Germany will stand strong in that. I'm quite certain. So that's why I'm saying I'll still be holding the bonds into a deflationary phase like that, because yields are not going to come up. That they'll still decline. What I'll say about the states or the struggle or the situation in the eurozone is still the same that we had in the financial crisis, and this is where nobody has understood that nothing got solved in 2008 or in 2012. What we did in the Greek situation was that we gave them some better rates, some better payment terms, and then everything was fine. The problem is now that the debt is now much higher than it was in 2012, where debt was the problem. And now it's not a problem, but if yields are going to come up a lot, and we're going to see these asymmetric crises that we can see, where Germany potentially could see yields declining, and you could see because of default risk in places like in Greece and elsewhere in Europe, you will have an asymmetric problem, a situation in the eurozone again, and I think that can become quite severe. So a breakup of the eurozone is not out of the question. I would say it depends on, as I see it down the road. If I get this right, that you have an asymmetric crisis, whether you're going to see um, Germany and actually Northern Europe fall into and say, okay, we will do euro bonds. We'll stand behind the debt of the southern European countries, because unfortunately that's the way it is. That you see that they are the places where we have the most debt problems. And if the eurozone says, well, we will not do that, or the Northern European countries will say like that, well, then there is a risk of breaking up the eurozone. Absolutely, because then you will see an asymmetric development in those two areas, and that will not be sustainable for even just a short time, because you'll start to see capital outflows from the southern countries into the northern countries, and so on and so forth. So it really comes down to that. How much do we want the eurozone to continue? And this is a problem that the founding fathers of the euro actually knew of, Jacques Delors and so these founding fathers. They actually knew that there would be these kind of problems down the road, but the political agenda of all of this was so much more important that they just pushed it through nevertheless. And now we are starting to see the problems of that. I think it's going to intensify. And yes, it can be a problem for the Eurozone as a whole. I can't predict which way it's going to go, but I could fear that we could see the breakup of the eurozone, but it's a more radical thing. So it's not something I give a 50% probability. It's probably much lower than that, but it's absolutely on the table.
Are there any parts of the globe right now that are going to either be immune or be able to be more resilient than others when it comes to a global deflationary bust?
Oh, that's a difficult one. I mean, I don't want to be in emerging markets when you'll see the Dixie is going to move up with to 120, if I get that right, into 25. That is going to be a terrible place. I don't think China or anyone else there is going to have a fun time either. I think we're starting to see the deflation of development there, actually, because they have a big problem in their whole real estate sector. I don't think that Japan looks great at this point here. I think we have had the most the perfect crisis becoming, because you can actually have a point where it's unable to stimulate even further, because I mean it's you have the perfect valuation with when the interest rates have been so low for so many years. I mean, there's very few places where you want to be when this is the situation, and that's also why I would say that the only solution to this will be the Fed coming out and deliberately trying to crash the dollar from 120, 122 or something like that, and put a pressure on that. And at that point, I'm going to be the biggest gold buyer. I'm going to be the biggest buyer of gold miners and silver and so on. But that's a different situation than we are in right now. And I think people find it difficult to say, yeah, but if it's 6 months ahead, why not now? Well, because why would I sit and look at gold declining by 30, 40, 50, 60% into a deflationary bust before I can pick up the miners for nothing? So I think it's about being a little more time, full in terms of how you get to the market, and say there are different kinds of developments in a crisis, and when will it be right to get in. So I don't think there's a place on where there will be places on in the where things may not be as bad. And I think maybe a place like Denmark could be a place, because we have our public finances in order. We pay rather high taxes, and people are okay with that. But I think we will still be hit by massive unemployment, and also by a lot of other things. But I think we will stand out rather strong, especially if the eurozone starts to wobble, because we are not a part of the euro, and hence do not need to support that. So we could have another kind of problem in a small country like this. We could have a capital inflow, which could be so great that the pressure on the Danish kroner could be to the upside, which would be another kind of problem, but a kind of a luxury problem in a world where things could come crashing down. So let's see how it develops. But I think very few places, and we have to go through this because by the end of this, and this is the what I think is we're going to see is the us paying the bill for all the free lunches we have taken since 2008. So we thought printing money was a free lunch. Now we have created the largest bubble ever. And we're going to realize that you cannot print wealth. You can create something that is felt like wealth for a certain amount of time, but eventually it's going to come to crashing down. And I think that is part of what we're going to see.
Let's talk about Bitcoin here. My viewers generally tend to hate it, but it has been consistently the best performing asset in my portfolio by a very wide margin. How much farther do we have to go in Bitcoin? Do you expect it to crash along with the broad market when this deflationary bust occurs? Are you a true believer when it comes to Bitcoin? Are you one of those people who believe I own Bitcoin because I'm storing my wealth outside of the financial system, free of counterparty risk? That's why I hold Bitcoin. I believe it could be money someday, that type of thing. Or are you just looking at it coldly and calculated as a trade? You know when to get in and you're going to try to get out at the right time.
I know when to get in and get out, I think. I kind of got in the at the bottom of it. I've been buying up Bitcoin miners ever since. I think Bitcoin miners is going to be a fantastic, develop quite amazingly over the next few weeks and months here. And I think that Bitcoin crypto is the whole crypto market is the very definition of the bubble that we have. I mean, every time you've seen in history of man that you've had a new technology coming out here, blockchain. At other times, it was the cars in the early 1900s. It was the railways in the mid 1980s. Sorry, 1800s. Sorry, not 1980s, 1800s. You actually saw that there was a speculation around that, and we saw it also with the dot-com bubble. It is the same all the time. We think, oh, now a new technology comes in, and we do not really know how what to do with it, and then just a lot of money starts to focus on it, and good stories come out everywhere. But just the bare fact that you're looking at meme coins and the like, just taking the lead here and moving up as fast as they have, it's ridiculous. I mean, it's a ridiculous bubble. And I will say, when it comes to Bitcoin, it has there's going to be a point in time where we're going to see potentially stagflation unfolding, if I get that right, then something has to be done by the governments and by the central banks. And they most likely will not like that money can just circumvent, the whole system and go into Bitcoin, into something else. So I think you're going to see that Bitcoin could be outlawed. You could see that it could crash because of the liquidity part of it, where I say that, when people are going to see the dollar going to 120, I don't think a lot of the crypto will do fantastically well, and I don't think Bitcoin will do fantastically well there either. Actually, on the contrary, I think they will crash. And so the whole narrative about this becoming money and there's nothing the Fed can do about it or anybody else, I think it's BS, honestly, and I'll say that out and loud. I think it's, if for, when the Fed and the rest of the world needs to get sound money back in again, they will not just allow thousands of cryptos circulating out there. Could they allow Bitcoin? Sure, maybe. Let's see. And this is the point in time where we'll have to say whether Bitcoin will be, one of the winners here at that point, or it could be one of the real casualties. Because if we see that the central banks of the world start to develop their own digital currencies and they have to create a new monetary reset where you kind of base it on that, I cannot see how they will say it. But it's fine if you put your money in Bitcoin, by the way, and we create another bubble there. When they see that, and that they will, when they start to react on this, and they understand the bubble that we're in right now, and they have to react to that, they're not going to allow another bubble to arise from that. So let's see what happens to Bitcoin, especially. I think 99% of the cryptos will crash, and they will never ever see the values that they have now. It's outrageous, the kind of money, the kind of the capitalization that you have now. And I'll just say to everybody who's sitting here, like economists and people that are starting to talk about, I know certain people that are saying, well, this is something that's going to develop into 25, 26, 28, and so on. And you're now early into technology stocks, and that's it. Correct. If you can find the 5, 10, 20 of the stocks, of the cryptos, that will do well. But that's not what we see right now. It's across the board. It's everything, and it's all the meme coins that have no value and no intrinsic value. So it's a bubble, and it's going to come crashing down. That's also what I said in my tweet. It's going to come crashing down, and people have to realize that, and they should not be soaked into that sentiment right now that we see. I think it's that's why I stand out and say it. I say it loudly. I say I ride it because I don't want to be called out and say, well, Henrik, you can't see that it's value now, and then but I also say I know that there's time when you need to get out, because when the real business cycle starts to take over here, you're not going to see this doing tremendously well, and that's it. So I ride it, and I don't see it becoming real money. I see it as, could it become digital gold at some point? Bitcoin, there's a chance for that. I'll give it that. Yeah.
Well, Henrik, this has been a fantastic conversation. Always appreciate chatting with you. For those who want to learn more, tell us about the Zeberg report and the work that you do at Swissblock.
Well, yes. So I'm the head macroeconomist at Swissblock, and what we do there is that, first of all, I work with macro. So based on our business cycle model, understanding the world and which direction is the world really going? Are we going into a new recovery in the economy, or is it going the other way? And this I also use with we advise our customers, which are also financial institutions, large and high net worth individuals, with these kind of perspectives, so that they can better understand the investment environment. So this is what I do.
And the Zeberg report, what it is you do there, and where can people find it?
The Zeberg report, yeah, that's where we have a with a weekly where I also tell about the economy, where do I see the economy going also, and yeah, it's been going on for 4 years now, 4.5 years. So that's also a place to look into.
Great. Well, I'll put links in the description below to Swissblock and the Zeberg report. Thank you once again, Henrik, for coming back on the show and sharing your knowledge with the audience.
Thank you, Jesse.
And thank you for joining us today. This episode is brought to you by ARC, silver, gold, osmium. For all your precious metals needs, head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.